Hello, everybody, and welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton, and if this is the first time that you're joining me here for this video, what I try and do here is look out into the Forex market next week and give you some idea as to what might happen, where the key levels might be for trading, and also give you a lot of insight into why you might want to look at those areas. So it is a mixture of both predicting what is likely to happen in the future and also giving rationale as to why. So hopefully you learn a little something while you're also getting some really good trading ideas for the coming week. And so if you're new, thank you very much for being here. And if you are one of the more than 47,000 people who have signed up to get this video every week, either through a direct email or simply by going to YouTube and subscribing there, I want to thank you very much as well. You're what keeps me coming back as we continue to see the page grow every single week. It is very much a blessing. I remember when I had 100 people who had signed up to hear about this, and now more than 47,000. And it's truly a blessing and humbling at the same time. But I'm a little under the weather right now, if you can't notice, or if you didn't notice. So let me try and keep it short this week. But if you remember last week, we were talking a little bit about the importance of continuing to trade your plan. And I showed you guys the equity curve here of the Syndicate, which is the subscription program that I run, the membership program, which basically I tell you everything that I'm doing. So if you guys really like what you're seeing here, the Syndicate is kind of the next step. And I meet with you every single day in War Room at 7 o'clock Central Time, and we talk about what trades I'm taking and why I'm taking them. And as you can see, guys, this is the equity curve from this year. We're into week 43. Last week was week 43. We're starting week 44 this week. And as you can see, guys, we had a really nice first of the year, about the first 21 weeks. And as I talked about last week, consolidation happening after that and all the struggle and frustration that brings, trading through the summer months. And then boom, as you saw here, very nice pop, then a sideways week, then the last 2 weeks, huge. This week, 533 pips is what we generated between Akil and I, trading patterns and basic structure. It really is incredible. And we did that. The interesting thing is, and kind of what I want to discuss with you today, is a lot of people think in order to generate that, you've got to be trading hours and hours and hours every single day. And you just don't have to do that. And one of the things that I have been discussing with the Syndicate members is how you can generate a very nice return just simply by trading a few hours in the morning, and either whether you're trading a few hours doing active trading on lower time frames, what we would consider more of day trading, or whether you're like me. And for the Syndicate, for example, I come in the morning, I try to place my trades between 6 o'clock and 7 o'clock Central Time, and then I let those trades play out throughout the course of the day. And it's amazing how just that 1 hour window of analyzing the charts and placing my trades can generate that much pippage. I think that of last week, I think I generated about 250 pips, and Akil generated about 250 pips, and we trade two basic strategies based around structure and Fibonacci levels. And when you think about that, man, 1 hour a day, 250 pips, and as you guys can see from this, let me just pull this back over. It's not like that every week. But we've been able to generate together about 3,000 pips this year so far. Now, that is incredible when you think about the fact that neither one of us trade more than probably 3 or 4 hours a day. I mean, I only put trades on once in between an hour window in the morning. And it shows that over time, if you follow your plan, what can happen. But I've been talking with the guys this week because there were a couple of days this week when I didn't even trade. I didn't even put trades on. And I came into the War Room and I showed the guys kind of what I was looking at, but I said, there's nothing here that fits my rules to trade, and so I'm not going to trade. I'll wait till tomorrow. And it takes a special kind of person when people are paying you to find out what you're doing and for you to show up and say, oh, I'm doing nothing. Because there's this natural desire to want to provide some value. And we did provide value. We talked about discipline, and we talked about a bunch of other things in there. So we did some psychological training in the morning. But there was no actual trading happening. And I talk to traders all the time, and overwhelmingly, one of the things that they deal with is this idea that if they're a trader, they've got to be trading all the time. That means if they come in the morning and they're going through their charts and they're looking at stuff to trade and there's nothing there to trade, they think to themselves, well, I'm a trader, I have to trade. That means I've got to go out and find something to trade. Even if it's something that doesn't exactly fit my rules, I've got to find something to jump in on. Because if I'm not, then what am I doing here? I'm not really trading. I'm not earning my keep, so to speak. And that's a fallacy about trading, is that there is some correlation between the number of hours you spend in front of your charts and the amount of money that you're going to make. Now, certainly there is a direct correlation between how much time you spend educating yourself and learning about what you want to do, on testing your strategies and developing your trading plan. That has a direct influence on how successful you're going to be long term. But there is no real direct correlation at all between the number of hours you actually spend in front of your screen trading and the number of dollars that you're going to pull out of the market for that day or that week or that month. It is what I call a time for dollars mentality. And unfortunately, no matter where we come from, the majority of the people that I talk to on a daily basis are time for dollars people. They're guys who work a 9-to-5 job, or nowadays maybe they work 10 or 12 hours a day, but they're paid based on the number of hours that they work, or they're paid on the number of the amount they get accomplished in the day. So the longer they work, the more they can accomplish, the more money they can make, or the longer they work, the more hours they put in. And we even have this mentality that if we work more than a certain number of hours, that we should be paid even more. So there is this incentive that, hey, if I work more than 40 hours a week, I'm due overtime, which is extra money. So if I work even harder, I can make even more. This is the mentality, the subconscious idea that's running through our brain, whether we want to admit it or not. And when we step into the trading realm, we get this idea that, oh, well, I'm trading. What I need to do is trade a lot. I'm a hard worker. I know I can put in the time. I'm willing to do it. I'll trade 15 hours a day if I have to. And they think that doing that is what's going to yield them more profit. And unfortunately, it just isn't true. In trading, we are paid for our discipline and our good judgment. That's it. We're paid to know what the right decision is, to know what the probability of success is, and to constantly trade the probability. Because nobody knows the outcome of a specific trade. You don't know it. I don't know it. Anybody who tells you they know is lying to you. I can tell you what the probability is over time. I can say, well, yes, I've tested this specific strategy and I've traded this strategy for 5 years and it's right around 60% or 70% accurate. And so I can give you a range based on my own history and my own back testing or my own study and practical application of the strategy, what the percentage is. But I have no idea whether the trade that I'm putting on right now is going to be a winner or a loser. And nobody else knows that either. So the important thing that you need to focus on as you are trading is understanding you're not paid for the number of trades that you place. You're not paid for the amount of time that you spend in front of your screen. And you are certainly not paid, you're certainly not paid for your I guess your hokey pokey bouncing around the market, or your switching of systems, or your ability to move in and out of positions quickly. You are absolutely paid for your knowledge, your discipline, and your good judgment. And nobody understands this better than entrepreneurs, guys who have their own businesses, because they are ones who understand above anybody else that, hey, I may go weeks or months without getting paid. I may do a ton of work on the front end of developing my product and creating my product and marketing my product, and I may spend a lot of time and effort putting this product together in the hopes that maybe it will be a success. And I'm going to spend a lot of money. I may be even taking on debt in order to build this little business and build this product. But down the road, I know from past experience that I've got a high likelihood of getting my money out of this product and being able to have a lucrative business. So those people tend to understand that. Also, guys who tend to either work semi for themselves, maybe entrepreneurial people who work in marketing or sales. Those are also people who really kind of understand this idea intuitively, because there are people who recognize that there has to be delayed gratification, that it requires a lot of work without the guarantee of an income on the back end. And what we try and do and what I try and teach is those same rules apply in trading. It's no different than any other business that you might create. It's going to require you to invest a lot of time, a lot of effort, energy, and a lot of money on the front end to learn what you need to learn and to put it into practical application. But if you do it right, we can create a statistical probability of success. So we can create a way that it's very hard to lose money if you'll do what you say. So for example, I know that my particular system is 60% accurate, let's say. And just so you guys know, over time, that's about where I come out. Between all the different strategies that I employ day to day in the market, about 60% of the time, I'm going to be right. So I know by placing any trade in the market, I've got 6 out of 10 chance of being right. Now, I don't know whether that's going to come 6 winners, 4 losers, 6 winners, 4 losers. It rarely comes like that. Sometimes it comes 10 winners, then 6 losers, then 4 winners, then another 6 losers, then 20 winners in a row. It's weird the way it works, but it averages out to about 60% accuracy. So what I always try and do is I try and find a risk reward inside of my trade plan that's greater than 1-to-1. I prefer a 1.5-to-1, but at least better than 1-to-1. And if I can create a risk reward that's 1.5 to 2-to-1, and I can create, and I know that my accuracy is somewhere around 60%, it's very difficult over time for me to lose money. It doesn't mean, folks, that we don't run into situations like this where we're not making any money. But it does mean that over the long term, the equity curve is going to go the right direction. It's going to go from bottom left to top right. And that's what we have to have if we want to be successful. Now, let's just get to let me just get to a couple of different trades that we can look at for today. This was stuff we looked at last week. Canada yen, looking at this support level around 94.22s. We could easily get there with a couple of up days. Market has pulled back, but is still looking like we found a little bit of support back down here at previous structure resistance. Aussie yen, same thing, had a little bit of a decline. We're holding structure level here. If you want to, you can drop down onto your hourly time frame and you can see where that structure level is employed. And if we can get a dip back down into a structure level, it may be a good opportunity to look to get long, maybe not. We'll have to wait and see what the market gives us. But those are a couple of different trades that we have been watching as well. The Bitcoin one that we've talked about, let me pull up Bitcoin. Bitcoin had a nice rally up into structure, and we actually called Bitcoin long, or I called it long back here at 231s, and we were trading a little bit lower than that. I think we were back down in here around 226s, and we called a long move back up into structure at least at 244. We got that, and then the market continued higher. We're now seeing a little bit of a pullback out of an overbought condition. Watch for a move back down into probably around 244s. Okay, you've got a little previous structure here. You got resistance here at 246s and another resistance level here at 244. So you might call it 245. We just drop one in at 245 roughly. That's going to catch kind of all of that. So if we can see a press back down into that, opportunity to potentially get long on a trend continuation trade moving north. We can retest structure at around 270s. And again, we've got structure supported around 274. So a couple of different levels here if we can see a decline and a nice opportunity. Gold has been a little flaky, but we had a nice rally this week right up into a 1618 extension. Market held there and saw a little reversal. So we will have to see. We also have, for those of you who follow, or those of you who are clients of mine who invest in our courses, if I copy and paste this, guys will see we had basically a 1-to-1 move back up here into the 1618 extension. So AB equals CD move. If we draw a little Fibonacci action in here, swing high to swing low, 618, swing high to swing low, 618 again, looking for the 127 extension. Right here, this is a lot of fibs, but for those of you guys who know what we're doing, we're setting up a nice Gartley pattern. 127 extension completes the ABCD move. So we may see a little pop here up into the 127, and what that's going to give us, guys, is a Gartley pattern, okay? There's a lot of different types of patterns. This is a Gartley pattern, and it will complete at a 127 at around 1195.18. So at about $1,200 an ounce, we're going to see a Gartley pattern complete, and we may see a return to bearish momentum. So keep an eye on that in the week to come, because that most certainly could happen if we rally here a little bit deeper. The rest of this stuff, one of the ones I had on from last week, this is on an hourly time frame, pound New Zealand, shorted here. We're a little bit into the money. We're going to see if we can get a follow-on down to around 24.84s or 85s. And this is really nice. These pound yen, or these alternate pairs, what I consider like the non-majors, supplemental pairs, move a lot. And so in this case, I'm risking over 100 pips here of potential risk to make about 245 pips, 247 pips of profit. And this got put on Friday, and if it will continue down, that could be a huge win for the start of the week. It's really not that hard. Now, if we lose, we're going to lose a big chunk of change, more than we would like to lose. But that's the nature of the beast. If you want to win, or if you want to stand to have a large chance of winning, typically that risk is going to be there as well, because of the average true range of any given market. Sometimes you can find it where it's real narrow, but in this case, we're just simply playing a continuation. So the market came down, we rallied back up, previous structure support becomes resistance, selling at the resistance, looking for a press back down in to retest structure. Now this, you can see, is a pretty decent gamble given the overall trend of pound New Zealand, and given the fact that if I bump out to my daily time frame, I recently broke structure to the downside and rallied back up into previous structure support, the last support level, and that's where I ended up shorting. So lots of stuff suggesting that this is a pretty good place to short the market. Now we are into an oversold condition, so that's a risk, but there's a high likelihood that we will at least come back down in and retest structure. But anyway, guys, that's basically it for this week. I hope you got some value out of this. Please sign up, check out the 2618 training and all the other training that we have at tradeempowered.com. And until tomorrow, or next week, excuse me, good luck and good trading. I'll talk to you then.